Navigating Bitcoin amid the ETH ETF debut, key levels to watch and strategies to consider. Hey guys, it's Keith Allen. Kicking off the week, we could have some volatility coming our way, guys. So here's the situation as we move into ETH ETF launch on Tuesday. Obviously, a lot of speculation going on. So, basically at this point, Bitcoin has been on a recovery rally since the dip down to 53.5. Market's wondering whether this rally is going to continue or if momentum is going to fade, in light of this, new ETH ETF debut. How's that going to potentially impact Bitcoin price? Well, a lot of people are speculating that it's going to be similar to the way the Bitcoin ETFs launched. And I would argue that that may not exactly be the situation because Grayscale, at least this time, is addressing the issue with a low fee offering on an ETH ETF, an ETH Mini ETF. So they still have their main ETF that's going to convert from the symbol is ETHE, which is basically their ETH Trust, which will convert into this ETH ETF. That still has the massive 2.5% management fee, similarly to the way the Grayscale Bitcoin Trust converted with that big fee. And that big fee was really what a lot of people think triggered that mass exodus for Grayscale and what really started the landslide once those ETFs were launched. Obviously, ETFs found their footing since then and things have recovered. But what Grayscale is doing this time around is they've introduced a new ETH Mini ETF. Initially, that fee was going to be a quarter point. Now it's down to 0.15%. So they have both the highest and the lowest fee offerings in ETH ETF offerings, and those are scheduled to hit the market tomorrow. So going to be interesting to see how ETH fares relative to that. You know what? I haven't even looked at an ETH chart, so I want to look at that here in a second. But at this stage, whatever the case, right? Maybe we're going to see some portfolio rebalancing from TradFi investors who bought into the Bitcoin ETF and want some diversification. So that could conceivably trigger maybe a loss of momentum for Bitcoin. And we may actually be seeing that now. We could also see some funds just rotating into spot ETH to play off the demand that's expected for the ETH ETF. So, at this stage, if you aren't already in the process of building a Bitcoin position, you might be telling yourself, I'm going to buy the next dip. The problem is you don't know how deep that next dip is going to be. There's always going to be a dip at some point, right? But you don't know how deep that dip is going to go. And you don't know if it's going to come from this range or if it's going to come from the next range higher. So in this analysis, I'm going to identify some key levels to watch to determine what range the next dip might be coming from and how low price could potentially go without breaking the trend. So in addition to using fire charts and order book and order flow data, we're going to look at another indicator, the MTF mean reversion indicator from Material Indicators that I've been using to identify dips so I can buy incrementally as part of my dollar cost averaging strategy to build my longer term position. With that, let's climb into the charts, and we can start here with fire charts, I guess, and look at how the liquidity has been moving here over the past week. We've really seen a nice shift in how price has been flowing, and a lot of it, of course, relative to what's happening up top here in this 70K range. We've seen, these large blocks moving around a bit. They've moved both higher and back lower. We're basically seeing a lot of puzzle pieces move around here, and you can see that. I want to zoom out a little bit wider, and we can look at kind of the nature of this level that has had so much resistance for so long. Ever since we started engaging with this level here, right? This was back in all-time high territory. We've seen a lot of liquidity-based resistance here at the top here. Obviously, things were stacked pretty hard here back in June, and we saw a breakdown here leading into the late June and early July. We bottomed out at this 53.5 level, at least locally bottomed out, and sure, there's a chance that fails, but it seems like we're on a nice trajectory, a nice recovery. continue in this trend from here. And you can see that, you know, these walls have been broken up, right? So the concentration is not quite as solid as it was heading in a few, you know, 4 or 5 weeks ago, right? So that makes it maybe a little bit easier to penetrate. Not going to be easy. Don't get me wrong. It's not going to be easy at all. We've got strongest resistance here at the 70K range. And we also have a lot here in the 71.9. And what's interesting and what's important about the 71.9 range is the last two prior highs, okay, were very, very close together. The last one was 71.949, and just a week or two before that, it was 71.958. So that 71.960 range is the higher high that we need to take out, and before we can go after the all-time high, and then eventually work our way into you know, price discovery up here. We're building this cup and handle structure. And if you're not familiar, I did an in-depth analysis on this last week. We also did an in-depth on the ETH ETF. If you want more info on that, you can look on the page on my YouTube channel and find those previous two videos if you want some more insight on those. But this cup and handle, you know, you can see the cup here pretty well. The handle to validate, right? We need to see what we need to see happen is, you know, this right here is the local low at 53.5-ish. And so we need to see volume continue in this direction. We need to see a rise in volume, which we have seen the last 3 consecutive weeks. Volume has indeed been higher. So we'd like to see that trend continue for this to validate. And ultimately, it has to eventually break to the upside. So that break to the upside, what it's going to take for that is going to be significant. The first thing is RS flipping this 21-week moving average, and we're in the process of potentially doing that now. As you can see, it broke down here about 1, 2, 3, 4, 5, 5 weeks ago, 5-6 weeks ago, and since breaking down at that level, it's, you know, we have one candle, a 1-week candle that took us back above that level. So this is the first candle with a chance to live its life above that 21-week moving average. And if it does so without any wicks below, that's strength for this level, right? A wick below would indicate that, hey, potentially we're going to slide back down towards this prior historical range of interest here. And that's down, you know, obviously would include the lower low that we want to defend, but the range box is, you know, around 56.7 to 61.5-ish in that range. So holding this RS flip is important. And then the next one that comes to mind for me is going to be this 69K level, which is the prior all-time high. Now, as I just showed you on fire charts, we certainly have more liquidity-based resistance at 70K and at 71.9 than we do at 69K. But I would maintain that in order to go after these other levels with any real chance of sustainability, we need to RS flip 69K. So we came close to retesting yesterday, but you know, it's over $500 shy of reaching that level. So I'm not going to call that a legit retest yet. And as long as we're above this 21-week moving average, we have a chance to go retest that. What I'm watching for now is the strength of the move. So let's just say on the next attempt, we do get a retest that takes it through that 69K level. And if it happens in one candle, that would be a sign of strength to me. If it wicks below, well, then that's an indication that we're going to go back and test prior support potentially, right? So I'm looking for the strength of this move when it happens. It's not a matter of if, but a matter of when that happens, and whether we see some momentum loss because of the ETH ETF. I mean the ETH ETFs remains to be seen. You can see the ETH is also kind of in a similar situation. Where it also just reclaimed the 21-week moving average, but it's also, I would maintain, in a stronger position because it bottomed out at the 0.5 fib and is now sitting above the 0.618. That's the golden pocket. So we're not too far from being able to go back and retest all-time high territory up here. so that's to be considered. So what is this ETH demand going to do? I want to show you something here. Let's look at ETH BTC to get a feel for what ETH is doing. And as you can see, that price has been breaking down a little bit. It just lost the 21-week moving average, and this indicates more strength in ETH than Bitcoin. This is what I was talking about in the beginning of the stream here, right? If we see more money rotating into ETH, then we're going to see some softness here on the Bitcoin side, at least until things normalize. So we could see a few weeks of this, or even months, who knows? Depends on what the demand is on this ETH ETF. And while we expect it to be strong, I don't expect it to be nearly as strong as the demand we saw on the Bitcoin ETF. Not at all, right? So, hey, yeah, I see a comment here from someone speaking in Korean, so I can't read your name, but thank you for joining me. Subtitles are activated. It just takes some time to populate here on YouTube. So if you come back and revisit it in a little while on the YouTube channel, you will see subtitles probably within the next hour or two after the stream. Okay. Hey, Santos, good to have you. Good to have you guys back. So anyways, back to what I was saying is, this could be a sign that we are indeed seeing that momentum fade a little bit on Bitcoin, and that's okay, right? So as long as these levels hold, right, the structure is still intact. I don't. Technically, we could go lower, right? Technically, we could go and maybe even retest this 50K level. I would say though. For this strength to continue, for us to see a breakout attempt sooner than later, and by sooner I still mean we could be weeks or even months away. I'd like to see this low protected. In other words, as long as we don't make a lower low, I'm good with grinding up here a bit for a while longer. So again, whether we lose this 21-week moving average or we regain this 69K level is going to clue us in as to whether we're going to have momentum to go higher or we're going to fade back a little bit. And so in terms of other places that we could potentially go from here, I think, we talked about this, what resistance we're going to see on the upside. We know we have that 70K and 71.9 and even some strong resistance up here around 72, just around 72K before we get to the all-time high. For me, the healthy move would be to consolidate here a bit, take out 69K, consolidate between 69 and the all-time high before then working our way into a new all-time high and then potential price discovery from there, right? Now, how low could we go if things go south? Well, it's worth noting that we do have a CME gap down here. Oh, I've got my MTF on. We do have a CME gap down here that could potentially be filled, and that is still within the realm of possibilities. That's down at what 57,845 ish, or maybe you go to the high 58,79. Here we go. Anywhere in this range is possible, right? So if we close this gap, that still leaves us well within this zone, this red area of interest. If you're not familiar with what that is where we saw the RS flip around the first distribution leading into the top of the 2021 market breakdown, and then new all-time highs. And this was very significant, as it has been here as well. In terms of an RS flip. So we flipped it, then came back after this 21-week moving average. Now we need to see that hold again, right? So a retest down here without jeopardizing, without a lower low, to me, continues us on this trajectory. Hopefully we see it continue to have high volume, and this trend continues. So that's really what I'm looking for in terms of potential opportunities to buy lower. But we can't bank on that, right? Especially if we flip this thing pretty quick. So how do you, time in the market is really tough. How do you find the best dips to buy? Well, I can tell you that I've been using a strategy for a long time that works well for me, and it's a dollar cost averaging strategy. And to do it, I use our MTF mean reversion indicator By ours, I mean material indicators. And let me let's go to just a straight Bitcoin setup here, and I'll show you how this works. Really quite simple. For those not familiar with the concept of mean reversion, I'm going to take out all these moving averages and clean up this chart so we can just see. Oh, I didn't even go to the right chart, did I? No, I did not. Excuse me. Here we go. The concept of mean reversion is quite simple. It basically states that price likes to return to mean. So for those not familiar with it, we're working off of basically a Fibonacci grid. And what this shows here is, in this instance, I'm set to a 3% deviation, and I'll explain that in a minute. So the center line is mean, and this line adjusts throughout the day, every single day. And at 3% deviation, what I'm saying is I want to buy dips every time price dips below this 3% deviation. It is likely to snap back to mean, at least. And so, the same principle works in both directions. When price gets higher than mean, it's attracted to spring back to that, and you can see that. So at a 3% deviation, which is that's a pretty deep dip from here, pretty conservative actually in the grand scheme of things. In fact, we may not have even had any dips that shallow here in the recent days. And TradingView unfortunately only gives us a short history on trades with high volume, on assets with high volume. So let's take this down and show you a more aggressive setup that could likely get more trigger more signals. Right at 1% deviation, as you can see, we're getting a lot more signals at this level, right? And again, price snaps back to mean, and in many instances goes higher. So this particular indicator, like I said, I've been using it since like 2019, maybe even before that. Actually, before we even launched the company. And so this indicator has a history of returning decent profits. I mean, like price going 1.25% or higher. About 96% of those trades go 1.25% or higher. So it's really good just for scalping. And if you want to go to higher deviations, deeper deviations, you're going to get fewer signals, but the upside potential could be greater, right? So the way I work my strategy in dollar cost averaging on tight deviations where it's not that big of a dip, I'm just taking small orders, small incremental orders, and dollar cost averaging. On the deeper dips, which come much less frequently, those are the ones I'm going to place bigger orders on and I'm more likely to hold, right? So those are good for a swing trade. They're also good for accumulation strategies. So different ways you could set this up. Plenty of tutorials on that on the Material Indicators channel. I'll have links down in the profile, in the description of the YouTube channel if you want some more info and insight on that. And with that, I think I've given you guys enough to marinate on for the day. Again, those ETH ETFs are launching tomorrow. You can see that demand for the Bitcoin ETF has remained high. In fact, Friday was a mega day, 427 million in inflows on Friday. And so going to be interesting to see if this pace is maintained once those ETH ETFs start rolling out tomorrow. Are we going to start seeing some of these funds roll into the ETH Mini and the other ETF products? We'll see how that all shapes up tomorrow and in the coming days and weeks. All right. Thanks again, guys, for the support. As always, if you like the content, do me a favor and smash all the buttons. Especially make sure that you hit that subscribe button up there, because you can make sure that if you do so, you'll make sure that you never miss any episodes. I'm back to doing these live streams pretty much daily, and going to do my best to maintain that pace as well. Again, if you're interested in any of the tools, links are below in the YouTube description. Going to wrap it right there, guys. Have a fantastic week. And as always, trade safe, my friends.